Hello, this is the voice of Mr. Solution. It's my pleasure to welcome you to this cryptocurrency training course. Actually, this is the fundamental aspect of it. I intend to take you on a journey, letting you know what cryptocurrency is, how it works, how you can trade, and as well invest in it. I hope this experience becomes a memorable one for you. Okay, the course title is Fundamentals of Crypto Trading. A whole lot of persons have been hearing about crypto, or perhaps you must have heard about it, but then you really do not know what it is. That is why I arranged this course, or rather put together this course to let you know what cryptocurrency entails, it can be traded, and how you can equally benefit from it. Here is the course rundown. We'll be looking at what blockchain technology is, divisions of cryptocurrency business, introduction to CoinMarketCap.com, reasons why people trade crypto, types of traders, market cycles, how to detect the cryptocurrency price movement, introduction to cryptocurrency exchanges, trading terms explained, understanding candlesticks, the bull and the bear markets, support and resistance, and finally, we'll be looking at the common trading mistakes people make. First of all, what is blockchain technology? Actually, cryptocurrency is not just blockchain technology, or rather, crypto is not just the only thing that is built on blockchain. Blockchain is a different technology on its own that encompasses even blockchain finance, blockchain agriculture, and then other aspects of human endeavors, which can actually equally be built on the blockchain technology. But then people are more into cryptocurrency. So that is why anytime you hear about blockchain, the only thing that comes to your mind is cryptocurrency. Please remember that cryptocurrency is just two words joined together. We have crypto, then we have currencies. Of course, we know what currencies are. Then crypto is something that is encrypted. Okay, something that is encrypted. Hence the word cryptocurrencies. In other words, you can say cryptocurrencies are encrypted currencies. Okay, not just the normal thing we can see with the eye. It's not like the normal currencies we can see, we can feel, we can touch, and the rest of it. No. So, like I said, the blockchain technology has many aspects of human endeavors under it, but then of which cryptocurrency is part of it. Okay. So let's proceed. Then someone must have asked, or you must have heard at one point in time, blockchain. So I want to ask, how much have you heard of blockchain? Going forward, I'm going to borrow the definition of blockchain as put forward by Mark L. Andreessen, who is the co-founder of Andreessen Horowitz HPE Board of Directors. According to him, he said, blockchain allows for one internet user to transfer a unique piece of digital property to another internet user, such that the transfer is guaranteed to be safe and secure. The consequences of this breakthrough are hard to overstate. This is just a long grammar. What it means is that the blockchain technology allows you to transfer something to another person without both of you having to meet. As long as there is internet connection, there is a transaction can always occur without you people seeing each other or without you people meeting each other. I think another word for that is trustless. Okay, it's a kind of trustless transaction whereby you are carrying out a transaction with this person. You don't really need to trust him. I don't really need to trust you to have a transaction with you, because there is really a third party, which is the blockchain technology that does the trusting for us. Okay. So the essence of this course is not to talk about blockchain technology and all that. So no, that is not what this course is meant for. But I think it's expedient I open our minds, or rather give us an overview of what the blockchain technology entails. So the cryptocurrency business is divided into two aspects. There is a trading aspect, there is the investing aspect. Firstly, who is a trader and who is an investor? We can see a trader as somebody that that maximizes the up and down movement of the particular investment instrument. When I mean investment instrument, it could be anything, because cryptocurrencies are not just the only investment instrument. We have things like commodities, we have stocks, even the forest traders, those who trade forest, they have their own investment instrument, which is the various currencies they trade. So in cryptocurrency, a crypto trader maximizes the up and down movement of the price. In other words, the fluctuations of price is what he maximizes. A trader buys at a lower price. For instance, he could buy at $1, and if the price rises to $1.50, he could sell and then keep the 50 cents as a difference as his profit, and then wait for the price to come down again to $1 for him to buy again. Okay, but now this is totally different from an investor. An investor is not really concerned with the up and down movements. An investor could hold a coin or maybe or any investment instrument for years, months, weeks, or as the case may be, depending on his choice. So what he does is that he buys it at a price he considers reasonably cheap and then wait for it to increase higher. For instance, those who bought Bitcoin as at 2015 or thereabouts when it was selling less than $100 or thereabouts, a whole lot of them kept holding it until late 2020, late 2017, I should say, sorry, until late 2017 when Bitcoin went as high as $20,000. Then some of them sold, some didn't actually sell, as the case may be. So that is the difference between a trader and then an investor. But then as a cryptocurrency trader, a trader might not just have that patience of holding it from that 2015 up to 2017. Okay, so he must have made some swings, so to say. He must have sold at one particular point in time and then bought back again. But then an investor doesn't concern himself with that up and down movement. He just waits until he gets to a particular target. It could be times 500, could be times 1,000, whatever percentage it is he is aiming for. He buys, he sells it at that point in time. So that is the striking difference between a trader and an investor. Okay, we'll be having an introduction to CoinMarketCap.com. Actually, CoinMarketCap.com is the place where you can see various coins that are traded in the cryptocurrency markets. Okay, for instance, if you want to buy cars, there is a place, there is a marketplace for cars where you can go to buy the car. Same thing also applies to cryptocurrencies. If you want to buy, if you want to trade, there is a general market for it. So in this general market, you can now see the various coins that are tradable and then the various exchanges where you can trade them, because it's not all the coins on CoinMarketCap that you can trade on a particular exchange. Let me walk us through the CoinMarketCap.com website so that we'll have more understanding of it. Okay, CoinMarketCap.com. I'm waiting for it to load. Just be patient. Having network glitch. Having a network glitch. Okay, it's loading. All right, so here is coinmarketcap.com. You can see, even though the website is still loading, but we can still proceed with our introduction. All right, so this is explanation rather. So this is the coinmarketcap.com. The website has not fully loaded, hence it's looking like this. This is not how it looks like. It's more beautiful than it currently is. So as you can see, these are the various coins that are traded. Okay, so these are the various coins that are traded on coinmarketcap.com. These are the various coins that are listed there. There are thousands of them, I think 2,500 or more as the case. I can't really remember now, but I know there are much. Next 100, you can as well view all. Okay, so, but the good thing about this thing, one thing about it is that all the coins here are ranked, or rather, they are rated according to their relevance, or rather, should I say popularity, or according to their coin market capitalization. Okay, so that is how they are usually rated. And let me have right? So we can see the number one coin here is Bitcoin, followed by Ethereum, Tether, SRP, that's Ripple, Bitcoin Cash, Bitcoin SUV, and it goes on and on and on. Yeah, like I said, there are thousands of these coins. There are thousands of them. Okay, so you don't just come to trade. There are some things which you have to look out for before you can trade any of these coins. All right. So and then also, as just as I said initially, when you see any coin here, you can as well go ahead to check the information about it, just as I'm trying to do right now. I'm trying to know more about, maybe I want to trade Litecoin. I want to know more information about it. See, it has loaded. Now, here it tells me the price of Litecoin is around $47.17. That's the current price of it. Okay. Now, equally, if I still go down, I'll still more information about, still see more information. This is the market capitalization. This is the 24-hour volume, the circulating supply, and then this is equally the maximum supply. Actually, there is this belief that whenever if a coin has a smaller supply, the price tends to increase, which has equally been proven to be true. Because if you check the ratings in the CoinMarketCap, the coins are rated according to, okay, the coins are valued according to their supply, and not just their supply, but equally their relevance. And those coins that have a higher price, those ones that are sold at a higher price, if you look at the supply, it's usually limited. But then I don't want you to have this perception that the supply of a coin is directly related to its price. No, because there's equally some coins that have lesser supply, but when you look at their price, it is usually nothing to write home about. A coin is rated according to its relevance. If a coin is fulfilling a purpose, if a coin is doing something in the world, like if it's used for a particular purpose, that is how it is being rated. For instance, Bitcoin is number one. It is number one because of is the coin that has the highest acceptability. In fact, there is nobody that knows about Bitcoin, about crypto, that doesn't know about Bitcoin. In fact, when you talk about crypto, the only thing that comes to people's mind is Bitcoin, because it is the first. It's not really the first, but in terms of acceptability and then and other characteristics of money, such as divisibility, durability, fungibility, verifiability, and the rest of it. Bitcoin has all these characteristics. So hence it's being rated as the number one. Litecoin on its own is the number seven coin. The rank is number seven. Then you can equally, if you equally want to know more about Litecoin, you can as well visit the websites or maybe the announcement pages or the social media platform, or their social media platforms, or their social media channels. Okay. So if you look down here, you can see this is just a graphical representation of how the coin has fared so far. Okay, you can see from here, okay, when you tap at this is Tuesday, May 7th, 2013. The time, it shows you the the market capitalization, it shows you the price. Okay, as at May 7, 2013, Litecoin actually once traded for $3.27. Okay, and this is the equivalent BTC price, that's 0.0293 for address, and then 24-hour volume. So this chart gives you the overall performance of the coin so far. Okay, just the graph, the chart is not really that much educative, but then if you can just glance through it, it will tell you, show you one or two more information about it. So this is more about the Litecoin. If you still want to know more about the Litecoin, you can just read it up. And then here is the general statistics of Litecoin, how it has performed so far. Litecoin price, the current price, the ROI, that's return on investment. I mean, those that bought it as at when it first came out, 2013, I guess. So this is the profit they've made so far. They've made as high as 997% profits. Okay, so here it shows you the rank, the market cap, the current 24-hour volume, the circulating supply, the total supply. Please know that there's a difference between circulating supply and total supply. Total supply means the number it will ever be. Okay, it has been mined. There's nothing like mining it more. But then the circulating supply means the one that has already been mined, the one that is already in circulation. Mine, I mean M-I-N-E, to mine something, just the way we mine some precious metals and the rest of it. So this is the circulating supply, shows us the quantity that is currently circulating. That's the one that has already been mined. Then this total supply tells us the amount of it that can ever be in circulation. Okay, so we look at all-time high, the all-time low, the 52-week high and low. That's 1 year high and low. Okay, there was a time it got to $146.43, and then it fell to 25.57. So just look at this place, you still get more statistics. So um that's how the various information about any coin you intend to trade. That's how you can always get them. Okay, like I said, Bitcoin is the number one thing. Please, there is something I skipped. Let's go to that. Like, okay, you can always choose another coin. Okay, let's just use EOS. Let me explain something, because I told us there that when you come to this market cap, it shows you more information about the coin. And not only does it show you more information, it equally tells you where you can always trade it. So for you to know where you can trade the very coin you've analyzed or you've chosen to trade, you can always go to a market pairs. Okay, sorry, it's not market pairs. Sorry, that's it. I'm right anyways. It's market pairs. So this is the place where the various coins are traded. These are the various exchange. We still talk about the difference between exchange and marketplace, okay? And then some other platforms. Okay, these are the various exchanges where you can trade Litecoin, where you can buy and sell Litecoin. You see, there are many of it here. There are very many of those exchanges where Litecoin is tradable. Okay, so in any of the exchanges, it tells you the pair that you can trade with it. It tells you the rank. It tells you the source. It tells you the price or the price that is tradable in that exchange. For instance, in CoinX, US BTC is trading at $2.84. But then in Bilaxi Exchange, US in Binance Jets, US BTC is trading at $2.83. So that is the thing. Each of the exchanges has its various trading price. Okay, there is a reason for that, but then we'll talk about it when we look at exchanges proper. Okay, you probably see the liquidity, the category, and then the updated information about it and all that and all that. So that's just what I want us to know, that whenever you want to trade a coin, you probably have to check where it is tradable, where you can always trade it. Okay, so the CoinMarketCap.com gives you the general information or the general statistics about every coin you want to trade. This is where all coins are currently tradable in the markets. This is where they are listed. It's a website, so to say. It's a website owned by one of the. It was recently bought by one of the exchanges. Binance Exchange recently bought CoinMarketCap.com. So that is all for that. Let's still go back. Let's continue. Okay, we've looked at we've introduced CoinMarketCap.com. Then going forward, we have to ask ourselves, why do people trade crypto? Like, what is the reason? Why choose crypto? Why not forex? Why not stocks? Why not commodities? Why not auction? Why crypto? Why do people trade crypto? Okay, there are many reasons why people trade cryptocurrencies, but then I've just chosen to put just a very few points. Okay, so I said that people trade cryptocurrencies because of the volatility. The cryptocurrency market is a very volatile market. Volatile in the sense that it's always moving. Like, the price is never stable. There's never a dull moment. Things are always happening in the market. I think that's the right word. When you say somebody is a volatile person, it means there's never a dull moment with the person. So it's a very volatile market. Things are always happening. Price is always going up. Price is always going down. So people tend to maximize this up and down movement of price. Okay, unlike stocks where a particular stock can trade for like $200 in 2 weeks. It's still there, nothing is happening. Okay, but this is different from cryptocurrency. There is always a high level of volatility. So I said here, you can make large amount of profits if you can correctly anticipate the price, the movement of the price. Okay, if you can anticipate it. By anticipation, I don't just mean guessing. It's not a guesswork. You anticipate by after carrying out a series of analysis, which could be fundamental, technical, or sentiment analysis. To talk about that as we go forward. Okay. Another reason why people trade it is that it has an ease of entry. There is really no barrier to entering, becoming a trader, as long as you can register with an exchange. Okay, with your password, email, and then verify your account and all that. You can just go right ahead and then start trading cryptocurrencies. Unlike other markets where you have to do this, you have to bring your light bill, you have to bring this, you have to bring, you have to do all those things before you can start trading. This is different from cryptocurrency trading, and it's open for everybody. There is a low barrier of entry to it. So, and it's equally open 24/7. There is no closing. For instance, other markets don't trade on weekends. It's Saturday. I'm doing this video on a Saturday. If you check some of the market, majority of the normal markets, they are not, they can't trade them today. They all closed. Forex is not trading on Saturdays. It's not trading on Sunday. It opens on Monday and all that. So that is one of the reasons. That is one of the edge that one of the edges, I should say, that cryptocurrency has over other financial markets. Okay. And then another thing is that it's not regulated. There is really no regulation. Okay, I don't know if I should say this is more a disadvantageous aspect or more of an advantage to cryptocurrency market. It's not a regulated market. Anything can always happen. Okay, there's nothing like government telling you don't do this, don't do that. Even though we've heard instances or we've heard of cases where some countries, so to say, tried banning the trading of cryptocurrencies there. But then it's just a matter of time, everything quells down and then the market continues again. Okay, so there is really nothing like government interference. Like I said, it's different from other traditional markets, which are usually regulated by the government. Cryptocurrency trading does not require anybody to tell you what to do. The only thing is that some countries might ban the use of maybe ban some particular IP address, maybe some by using your IP they might ban and say these people are not supposed to be trading or even if they ban it, you can always use your VPN. Okay, you can always use your VPN to, once you activate your VPN, you can always start trading and all that. But then, because it's not just one exchange we have, if this country does not support this other country from trading in their exchange, you can always switch to another country that supports your own country. So that's it. Then we look at types of traders. Actually, there are various types of traders. There are people who are always looking at their laptops. I think I belong to that category, I should say. I belong to that team of people always looking at their laptops, making maximizing the opportunities presented by the up and down movement or the fluctuation of the prices. I belong to that category. But then there are equally some people who are not really concerned. What they do is they just buy and take their mind off it. After some time, they come back and then cash out. So we say we have the day traders. I am a day trader, so to say. Mr. Solution is a day trader. So day traders conduct multiple trades all through the day. But then at the end of the day, they always close all positions. They don't leave any position open. I am a day trader. Okay, so I can conduct as many as I want, as many trades as I want in a day. But then before the day ends, I always close it. I don't allow it to overstay to the next day, except maybe I decide, or maybe there is a reason why I'm leaving it. Now we have scalpers. Okay, scalpers are a sublets, or rather a scalper is a sublet of a day trader. Okay, it's a day trading strategy where you make substantial profit on the small price movements. Okay, and they focus mainly on small time frame. Okay, we still talk about the various time frames we have in trading. Okay, so a scalper believes that if he can be making 50 cents per trade, if he does it for like 10 times in a day, if he gets 50 cents in a day by 10, like he has made $5, which is true. So scalpers actually maximize the small, like he's scraping the pot. Let me put it that way. A scalper is scraping the pot. He doesn't want to dull. He's just maximizing the opportunities presented by the price fluctuation. So scalpers focus on extreme short-time trading, and it's based on the idea that making small profits repeatedly limits risk and creates advantages for traders. Okay, so they believe that instead of waiting for $2 profit, let them take $1, because by taking that $1, they are limiting their risk. There is a tendency that it might not get to that $2 again. So they say, almost since I've seen $1, let me just take that $1. I will rest again. If it comes down, I will enter again and then take another dollar. So you see that. So they can make dozens and hundreds of trades in a day. So that's for the scalpers. And then we also have the swing traders. Okay, swing traders take advantage of the natural swing of price cycle. The price is always moving in cycle from up to down. So what what swing traders do is that they identify the price movement. They identify, they kind of take note before the price moves. So they try to take advantage of the natural swing of the price cycle, and they tend to spot the beginning of the price movement and enter the trade. Then they exit the trade until the movement dies. They exit the trade immediately the movement dies down. Okay. So here I say swing a spot and enter at the beginning of the price movement and exit as it ends. For instance, okay, let me just say the example I used initially about Bitcoin when it was trading at maybe at $100. Swingers bought it then, kept it until 2020 when it went as high as $20,000. So some swingers sold off then. Okay, so they waited for imagine waiting for 3 years. So that's just what swingers do. They are long-term traders. Investors, I should say, they are more of investors than traders, okay? Because they don't concern themselves whether the price is going up or is coming down. The only thing is that they have a target. So they're only coming back to cash out when the particular commodity or the coin has reached the various targets they are looking at. Now, let's look at the various market cycles. Remember, I said that swingers identify when a market is about to begin a cycle, then they enter. After making some profit, they now exit when the market must have completed the cycle, or rather, they exit even before the market has completed its cycle. They enter at the beginning, just as we have here. Okay, a swinger might just can decide to enter a trade here. Okay, see, enter G, and then intermittently the price dropped to this point. He wasn't worried. He didn't disturb himself. He rose up again, came down, kept on doing this, and then until there was this rapid increment. And then he got to this very place. He now discovered that nothing was really happening much here. So is usually at this point that swingers normally exit the market. Okay, so immediately exited, price kept on falling down again. You can see it's equally at the same level as the place where it started from. So, okay, even in these market cycles, it is divided into various phases. We have the accumulation phase. Accumulation phase is when there's really nothing much that has happened. Price is just going up and coming down and all that. And then there is the advancing stage when prices are started making some rapid movement. And then there's distribution stage. Distribution stage is when though some people are coming in, some people are equally exiting, some are coming in, some are exiting. Price is going up and down. There's nothing like maybe a sporadic increment again as we had in advancing. Then after that, there's a declining phase. This is when people start becoming capitulated. Those who bought at higher prices, they will start regretting, and then price keeps on falling down. Okay, it's just that this cycle is more complex like people. Then because I want this thing to be as simple and as understandable to everybody, hence my just using this pictorial representation. Okay, so here I equally said there is really a range after 6 months decline. The price range is after 6 months decline, and then there is long period of consolidation. These are the characteristics of the accumulation phase, and then 200 moving average flattening. This might look complicated, but when you come for the advanced course, we look at some of these moving averages. Okay, then the advancing stage is characterized by breakouts from accumulation phase. This is the accumulation phase that's broken out from that, and then it forms an uptrend. That price keeps on going up. This is an uptrend. Price keeps on going up, and then price goes above 200 moving averages. Okay, moving average. These are the characteristics of the advancing stage. Then there is the distribution phase. The distribution phase is characterized by a range after a 6 months advance. After the price must have gone up for 6 months, then the distribution stage sets in. And then there is a long period of consolidation. Like there's really no much movement. It's just consolidating, so to say. And then after that, there is 200 moving average flattening. Okay, and this actually the 200. This yellow line is the 200 moving average. Is the 200 moving average. Okay, you always observe its location. in any of the cycles. Then finally, there's a declining phase. Okay, it's characterized by is a place where traders become long-term investors. If you didn't sell when the price was advancing, or maybe when it got to distribution, some persons tend not to sell again. They become long-term investors because they don't want to sell as loss. They just have to wait until price starts making another starts up another cycle. Okay, so this is equally the place where the price goes below the 200 moving average. This is the 200 moving average. You can see the price has equally gone below it. But okay, so another place we have to look at is how to detect a cryptocurrency price movement. Okay, how does one detect a cryptocurrency? How do you detect the price of a cryptocurrency? How do you know that this coin is going to increase? Maybe you should buy so that if it increases, you will sell. Or how do you know that you should sell now, that this price is going to fall? Okay, so the truth of the matter is that there is really there is no holy grail to knowing that. There is no you don't need a soothsayer to tell you this. But then, because market tells a story, and we have devised various means of knowing when a particular coin is going to increase and when it's going to decrease. So this is what we are going to look at. So, but to get this knowledge, we is divided into three. We have the fundamental analysis, that's the FA. We have the technical analysis, that's the TA, and finally we have the sentiment analysis. So, what is fundamental analysis? To know when the price of a coin will increase by using fundamental analysis. You're looking at the news. What is the news surrounding that very coin? For instance, Bitcoin. Okay, recently we had Bitcoin halving. Halving, like it means that there is a reduction in the quantity available for miners. Before it was 12.5, now it's 6.25. Yes, now 6.25. So there is actually a reduction in the price of Bitcoin, in the amount of Bitcoin available for miners. So this is actually a news, and it is, if you check, it was one of the things that made Bitcoin to rise as high as $10,000 some weeks back. Okay, before the halving happened. So that kind of occurrence is what we call fundamental analysis. Like say fundamental is just a news. And then we have development. For instance, we hear that there is a partnership between EOS. EOS is a type of coin, just the one we looked at when we checked CoinMarketCap. If you hear there is a development, maybe there is a partnership between EOS and Google, maybe they are partnering or something like that. It's one of the things that can make the price to increase. And this falls under fundamental analysis. And then equally talked about innovations. Maybe there are new things that are coming on board, they're introducing other things. So maybe they are bringing a famous person as one of their board of directors, or maybe one of their board members is a famous person. For instance, people who trade stocks and people who trade other maybe who trade forex, I should say, there are times when prominent people like Donald Trump. If Donald Trump makes a tweet and say um, oil is doing well or something like that, what happens is that the price of oil will skyrocket, will just increase because a prominent person like Donald Trump made that kind of statement. For instance, people who trade stocks, Elon Musk, okay, sometime last month he came to his Twitter handle and said that Tesla is overvalued. By overvalued, it means that the price of Tesla at that point is higher than what it should be. Immediately, he said that under minutes, Tesla stock fell as low as 70, less than 70, it dropped by 70%. So these things are fundamental news. That's the fundamental analysis aspect of it. Okay. So now next we look at technical analysis. Okay, by technical analysis, then that's when we look at charts. We look at the price action, we look at patterns, we look at trends, we look at price movements, regardless of what happens. We believe that price movements tell a story. So a technical analyst look at the charts. When he looks at the charts, he looks at what happened before, maybe today, okay, today being 6th or 7th, I can't really remember. Today being 6th of June, it goes back to maybe 6th of June last year, okay, 2019, I asked himself what happened. So by backdating or by looking at the past statistics, it will help him to know if where the price is going to get to. So this is the technical aspect of it. As a matter of fact, the technical analysis aspect of trading, that is where the bulk of the job is, because this is what we tell you where you are going to be buying and where you're going to sell it, or where you should sell or where you should buy. Okay, so here he said that regardless of what happens, price movement tell a story. So they're using the previous story, the price movement told initially, to know what will happen in the future. That's for the technical analysis aspect of it. Now, finally, we look at sentiment analysis. That's the SA. SA deals with the general perceptions. For instance, if I say Bitcoin is going to fall and another person says Bitcoin is going to fall, or maybe we are in a WhatsApp group or whatever group, and then everybody saying Bitcoin is going to fall, Bitcoin is going to fall. That is a sentiment. We are being sentimental about it. Maybe there's really no logic backing it, but because everybody is saying it will fall, it will fall. It might eventually make the price without fall, because psychologically, when I'm saying that this thing will happen and another person is saying it, what will happen is that maybe you have some bitcoins, you will now go and sell. If you now sell, another person equally comes and sells his own, you see the price will keep on dropping. So that is the sentiment aspect of it. It's one of the things that will help you to gauge the general view of or to know how the price will perform in the markets. Okay. So we now look at which method of trading is better. Should you use fundamental, should you use technical, or should you use sentiment? The truth of the matter is that nobody can accurately predict the future. And then I always advise that you mix everything together, mix all these various types of analysis, join everything together for you to arrive at a very good result. Don't just trade based off of sentimental analysis alone, or sentimental analysis. Don't just trade just because of fundamental, because there's sometimes some news will come out. To be expecting the news to have a positive impact on the market. It won't have any impact on it. Then equally, sometimes maybe you analyze, you are very sure of your analysis, you looked at your chart, you looked at the market history, and they are sure that this price is going to increase. But then a news comes out, could be negative or positive. Maybe a negative, so to say, a negative thing that comes out, and then before you know it, all your chart has been shattered, all the analysis has been, your technical analysis doesn't make sense again. It won't follow through because a news came out that kind of affected it. Okay, just as in the Ebola outbreak as at March to this 2020, 13th March or thereabout, when Bitcoin fell so bad, like it was so bad, it dropped like 50%, okay, in just 24 hours. Then what caused it? Nothing caused it other than the fundamental analysis. Maybe that's the news of the corona thing, that market was dropping, and it didn't just affect crypto, it affected all forms of financial markets. Okay, so that's just the fundamental aspect of it. So it's always good for, even as you're looking at your chart, as you're analyzing, always keep your ears open for news. Okay, follow up news, and you can equally get this news by, maybe if you're trading EOS, you can follow them, follow their social media handles, follow their social media channels, particularly Twitter. I think a bulk of the work there, the bulk of information about cryptocurrencies happen on Twitter. Okay, so once you follow their handle, you can always be checking them up. If there's any news, they always drop it there, or maybe their Facebook and all that. But I prefer Twitter because I think it's less noisy than other social media platforms. Okay, so we look at some of the trading terms. We are going to explain some of the trading terms. Look at the exchanges. Okay, I just wanted to understand that, like I said initially, when we looked at CoinMarketCap.com, exchanges are different from companies that sell BTC. For instance, we have BitcoinMama.com. Is a company that they mine and sell BTC to people. You just go there, put your debit card or credit card, whatever, ATM, I should say, put it there, then buy the quantity of Bitcoin you want, and then that is it. So the crypto exchanges are different from companies that sell BTC. And then they're equally different from marketplaces like Luno or local Bitcoin or Paxful. Localbitcoins.com is where people can sell and buy Bitcoin, but it is not the same thing as exchanges. Okay, then we have Paxful.com, it's still a marketplace. Then we have Luno. Luno is not an exchange, it's just a marketplace. Okay, so let's look at one of some of the exchanges. Okay, let's look at, these are the various exchanges. We have Binance.com, Coin.com, Bittrex.com, Bitmex.com, Huobi.com, Kraken. The list is endless, okay? But then you don't just go to exchange like that to do your trading. Don't just go to any exchange like that to trade without carrying out some researches, okay? So we'll be looking at We'll be looking at Binance Exchange as an introduction to other forms of exchange because all of them almost have the same interface, but we'll be looking at Binance Exchange. So we'll switch over to the Binance website. Okay, so this is the Binance website, binance.com. Okay, here this is how the website looks like. Okay, so we are just going to give a general overview of the websites. Okay, I'm just waiting for it to load fully. Okay, so